focus on Anthem Biosciences and figure out how their business has been holding up. And we've got the management joining in on the show right now. Ajay Bhardwaj, the founder, chairman, MD and CEO at Anthem, here on the show with us. Ajay, hi, morning. Great to have you on ET Now. Ajay, tell us what the business environment is looking like right now for players such as you.
Well, the business environment has been a little choppy for everybody. I mean, that's business. Business loves certainty, and for the last few years, for the last year or so, and recently, it's been quite choppy. But for us, as well as for many of the CDMO, the direction is absolutely consistent, and we expect to meet all our goals and targets that we have set out for ourselves for the whole year and beyond.
Okay. What's the kind of, you've penciled in mid-teens kind of growth. Give us a sense as to whether you're on course for that, Ajay. Q4 is seasonally stronger for you generally as well. Would you up the guidance? Would you believe that you'll beat that kind of mid-teens growth number that you've penciled in?
No, we are going to stick with what we have said, and that is absolutely what we're going to do.
Okay. Also, just give us a sense. Is there a structural margin improvement which can happen FY27 at all? Because your margins were traditionally higher. They've come off. Is there scope for that?
Well, I think what we've said again and again, these are fairly high margins, and we've maintained them over a long period. We have every intention and visibility that we will be able to maintain these margins going forward as well.
I want to talk about, Ajay, the recent developments, the fact that there's been a strategic transition of stakeholders as well at Anthem. Wanted to understand with regards to True North, the fact that they've offloaded nearly their entire remaining stake in Anthem. Do you view this as sort of a final chapter in that sense? And was there really any rationale behind it?
Well, private equities have their own compulsions. So, I mean, fundamentally, nothing has changed at Anthem. They, every fund has its life, and they would probably have to return their capital to their partners or limited partners. So I think from that perspective, True North, they were there with us for 5 years, and I think they have decided to go out because they have, this is what a private equity does. It has no bearing on the way Anthem is growing, or it has anything to do with our future trajectory as well. So
and Ajay, the promoter stake, etc., remains solid. There's no expected dilution there. Can that be something which investors can pencil in?
Yeah, I mean, listen, even during the IPO, I didn't sell. I'm the largest shareholder, and I don't see any reason to sell, and we will maintain. The promoter group has an overwhelming amount of shareholding, and they are holding on. And that's the reason is that we believe that we have a very solid business, and we have directionally, we're headed in the right direction. We're making the right investment. So I don't see that as a problem at all.
Ajay, let's talk business now. I want to try and understand this ramp up that you recently did of your Unit 3 facility, or for that matter, what the expansion plans are now on the GLP-1 semaglutide opportunity, because it seems like, just everyone's vying for the same.
Yeah, so, okay, first of all, Anthem is largely in innovator molecules, and the expansion that we've done in Unit 3 is now not fully done, but there are some parts which are just getting done. But Unit 3 is actually started contributing now to the top line, and it will turn profitable, I think, next year. And from that perspective, we actually are very well set with all our capacities and in place. Simultaneously, we've started building Unit 4 because, see, in our business, you got to build it and then they come, and we see that this business is, there is a lot of demand for our kind of services and product and manufacturing. So we are actually building a very large capacity expansion in Unit 4, which has also started. It will take a couple of years to be done, and that will, in terms of net capacity, it will be more than the capacity of all the other units of Anthem combined. So we are that bullish on our business. So that's one. And going back to the semaglutide opportunity, listen, we all understand that this is a massive market opportunity. It's also a technically difficult molecule, but everybody wants to play in it. However, Anthem has moved very decisively to be fully integrated in manufacturing semaglutide because we will. There is a fermentation element to it, and then there is synthesis element. Very few companies in the country have both these pieces together. Anthem has them, so we are going to do the fermentation fragment followed by the synthesis. So the arguably one of the very few players who can do entire manufacturing in India. Most people are looking at buying the fermentation fragment from outside, primarily China, and then do the synthesis. So Anthem will be one of the few integrated manufacturing of semaglutide. Of course, we don't have our own formulations business, so we'll be supplying to the companies which will do the formulation and marketing of these products.
But Ajay, just tell me, purely an industry view, it seems that it's going to be a very crowded space, this entire GLP-1 opportunity, right? So, I mean, who wins the game eventually?
Whoever has the best cost of goods and the best technology, and I believe we do. So, yeah, I mean, it's going to be crowded on the brands available, but it's not going to be so crowded in the manufacturing side of it. And when you take it, the complete manufacturing, listen, it's a very large peptide. So if people might want to get an element from buying an element and do one or two steps, and then that's also it does constitute manufacturing. But the manufacturing of the active will not be so many players. Yes, there'll be a lot of branded players in the market.
Ajay, in terms of your CapEx pipeline, you've suggested 1,000 crore CapEx and Unit 4 to come up maybe in a couple of years. Could you give us a better understanding of how that's going to be funded and what's the kind of glide path towards kickstarting that very large plant that you're putting up?
So, see, Anthem has, we are very low debt. So, and we also have a very strong treasury. So, funding this even internally is completely possible. But we'll see how the market condition is. We may take on a small debt, but we are self-sufficient to fund this 1,000 crore in the next couple of years. We may not have to take debt at all.
Okay, got it. And how much does this add in terms of a capacity? If you can quantify, does it add 20%, 30%? Give us a sense of that and the timing of the start of production there.
Yeah, it'll take, as I said, 2 years to build. It's a greenfield project. It will double the capacity that Anthem has. So, we have like 480 kiloliters. It will be, doubling that. So we will have significant manufacturing in-house now. Addition of significant more manufacturing.
Okay. And any new opportunities that you're hunting for outside of course, GLP-1, which is the big one, but any new ones that you're looking at?
Well, yeah, I mean, see, for us, the GLP-1 is a very small part of what we will do, but we are working with, as I said, global companies, and there are many projects which have in the very recent past have been approved and have become commercial. In fact, we were earlier, when we went IPO last year, we were 10 commercial molecules. Today, we have 14 commercial molecules. And once these start to hit the market, we expect a significant addition to our top line and bottom line. These 4 new molecules that have gone commercial in the last 1 year have a projected revenue of final product market sale of over $10 billion. So, we have a significant play in that opportunity.
Okay, Ajay, thank you so much for coming in and speaking with us. This has been a good kind of conversation that we've had across all